Hello and welcome to Dialogue. China's gross domestic product grew 5.2% year-on-year in 2023, hitting the government's around 5% target. Still, the world's second largest economy is facing multiple headwinds in the early going of 2024. So how has China's economy started off the new year? What can we expect out of the Chinese economy in 2024? Join us for our discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Hong Hao, Chief Economist of the Grow Investment Group, Weiwen, Senior Fellow from the Center for China and Globalization, and Dr. William Li, Chief Economist at the Milken Institute. Welcome to Dialogue. William, what about those, basically, Mr. He mentioned, multiple headwinds, for the economy in 2024. What about the prospects of overcoming those challenges?
Well, the policies are in place, and I think the policymakers have done a good job of trying to stimulate the economy. The headwinds that we're really worried about, at least from the Western perspective, is the private sector. Much of the growth from last year came from fiscal stimulus in the government sector, and also it's on the supply side. Many of the reforms are aimed at making China more efficient and bringing China closer and beyond the frontiers. But the key for us in the West, when we analyze China, is whether domestic consumption is going to be able to overcome the drag from the property sector and other job uncertainties that we are witnessing right now. So I think all in all, policies are in place. I think the government is doing the best it can. It probably can do a little bit more. But I think overall, we're anticipating a better recovery and a better composition to the recovery, a stronger recovery.
A better composition. Of course, you do see sometimes mixed numbers or mixed even messages over there. William, you mentioned earlier like this private sector. We do have this manufacturing, purchasing managers index or PMI from Caixin, which is often used to measure this private sector. That was 50.8 in January. Basically, it is in the expansionary territory. That's of course that's good. But at the same time, you have this sort of like a contrasting message here. The official purchasing managers index, PMI, rose to 49.2% in January from previously 49 in December. So that's still a tick upward, but it's lower than 50. The separation of expansion or contraction. What do you make of these numbers?
Well, one of the things I think we have to be very careful about is to read too much into little wiggles. I think the overall expansion that China's been used to is to have these numbers in the 60s and 70s, right? So I think the space that ahead is really quite far to go. And yes, it's optimistic that it's not getting worse. But I think the policies that are in place now really have to focus on the demand side. Many of the policies that have been put in place, as I said earlier, is that really boost the supply side. And we already have China's known to have way too much capacity on that supply side. Now, it's good to get rid of some of the old capacity that's inefficient and replace it with better capacity. But in doing so, it also creates job insecurity for those who are working in those older processes. So the demand side really is the focus. And I think the policies now have to focus much more on income stability and wealth stability. So wealth stability being primarily the property sector. So I think that's the new focus, I hope, for 2024 fiscal policy.
Mm-hmm. Mr. He, some say the Caixin survey, offered hope that what can they do, to reduce the risk of, let's say, tariffs or investigation or retaliation, from other markets, for example, for the Chinese EVs.
Well, the EV market is something where China really has done superb progress in engineering and tried to produce probably some of the best cars in the world. And in fact, I think one of the things that we should keep in mind is when, as Hong Hao talked about retaliation, it's retaliation because the concern is that there's a job loss in the part of the EU. And also competition in terms of parts in the United States. One thing to do is to have investments, joint investments. I think one of the things that China hasn't exploited enough is the possibility of doing joint ventures with their partner countries and to be able to share the kind of production efficiencies that China's experiencing with production in other parts of the world, mainly putting into those countries some of the more efficient factories that you now have in China.
Chinese investment in the EU, for example. William, do you agree? Of course, from outside, there's a lot of attention being paid to, for example, liquidation of Evergrande. But of course, now it's shifting quickly. People are talking about individual cities lifting these curbs. So, do you agree? Probably the only solution, to do it as quickly as possible, lifting all those restrictions.
Well, I think restrictions always distort markets, and I think I'm always in favor of lifting restrictions. But one of the things that we have to make sure of is that there's adequate demand for these properties. Lifting restrictions for something that nobody wants is not going to help the property market come back. So I think one of the things that Evergrande represented was bad corporate governance, and maybe some reform over the property market developers' business models is called for. People are very nervous when they hear that I have to prepay for an apartment or a flat, and then I have to wait a certain amount of time for that property to be built, but I've already paid for it. And what is the company doing with that money? I think the fear of it becoming a Ponzi scheme and companies just running off with my money is something that prevents people from having confidence that their delivery is going to be there, and also that they can resell their properties, especially when there's so much surplus being built. So corporate governance is something that I think we need to worry about, and reforming the way that the property market is sold, and having some more regulations on what it is that companies can do with the money that they've collected from the people. And maybe more of the Western business model, which is to say property developers build the buildings and then sell those existing buildings to new customers. That would promote a lot of confidence that there it is. I can.
Yeah, there's a tech glitch there. Then recently, the International Monetary Fund has released a report actually raising its forecast for global economic growth in 2024 to 3.1%, 0.2 percentage points higher than its forecast in October. William, so why are we having a better prospect for 2024 globally here?
Well, we're better than we were in October. I think the IMF is much more optimistic than we were in October, because the reforms for inflation have really gotten to the point where there's less of a need for monetary restraint. And I think that everyone is anticipating that the West will start to revive its economy as soon as inflation comes down to 2% and we hit our inflation targets. But for China, the most important thing that the report noted was that in the past, global growth was 3.8 and above. That number, and so China has really done a lot to drag down world growth. And it says that the fiscal policies that are needed in China are really to change the composition of spending to be much more directed toward income support and wealth support, because that's what will allow the Chinese economy to revive strongly and efficiently. And I think one of the things that the IMF hasn't pointed to exactly, but I think one of the Western analysts have noted was that defense spending and debt payments and interest payments on the debt are the two fastest rising categories in the budget right now. And I think one of the things that the IMF has talked about is the need to reform fiscal spending to allow much more in the way of private sector support, giving more direct subsidies to income subsidies to the consumers, which is something that China has really shunned away from, really focused on the demand side, the supply side instead. And also, I think one of the things that China can do is put in a social safety net, a safety net that lets people know that if all else fails, the government is there to help support my income. If I am elderly and retired, I have income to depend on. That will do a lot to stabilize the confidence that people have to go out and spend.
Yeah, despite all the uncertainties over there. Well, on that note, we come to the end for today's show. Many thanks to our guests. You can also find us on the CGTN app on YouTube. I'm Xu Qinduo. Thanks for being with us.